10 o'clock, so I'm going to just go ahead and jump in.
Right.
And welcome to Tax Tuesday, the first Tuesday of every month at 10 a.m. And I go live with questions that have been previously submitted by my viewers, followers, you, fellow taxpayers, all of that. And I also will attempt to answer live questions if I do get any, just so feel free to drop in the comments if you have any live questions. So my name is Heather Ryan, and I am the owner of Tax Queen, a tax firm that specializes in digital nomads, full-time RVers, anything related to renting RVs, you name it. I help those taxpayers out. I work with a lot of small business owners, and I get a lot of those questions. So I do see a few people here live. If you're catching this on a replay, thanks for joining me. But remember, you can always catch it live first Tuesday, 10 a.m. Mountain Time every month. I apologize if I'm looking at the opposite screen. I have my questions on a separate screen just so I can keep everything organized. So let's dive in. Question number 1. I am new to reporting distributions for an LLC. The LLC is a partnership between myself and my husband. We file taxes jointly. If we pay estimated taxes throughout the year directly from our LLC's checking account, is that amount counted as a distribution? So I guess yes, because your taxes are actually personal taxes. Let's back up. Partnerships do not pay taxes most of the time. The income is passed through to your personal return, so it's on a K-1 and it's reported on your 1040, and so therefore your partnership is basically paying your personal taxes and counts as a distribution. It's not necessarily a bad thing, but yes, I would say that it does count as a cash distribution because that is an owner draw or a partner distribution, partner draw, whatever you want to call it, and then you're using that money to pay your personal tax obligations. Also, one other tidbit, if you're a LLC partnership, you do have to pay self-employment taxes for anyone who is not familiar with that. So husband and wife LLC, multi-member LLC is a partnership by default. So hope that answered that question. Let's move on to number 2. I'm trying to figure out whether I'm eligible to contribute to an IRA. I had gross income, but something's typed wrong here. But due to extraordinary circumstances, no net income. So no net profit. Let's call it net profit. I have read and researched everywhere, but can't figure this one out. So you can only contribute to an IRA if you have income. So positive income, net profit. If you do not have that, you are not allowed to contribute to an IRA. That's the rule. However, if a spouse has income, you may be able to contribute to a traditional or a Roth IRA that year if the spouse has income. So hopefully that answers that question. That was a simple one. Let's go into number 3. My parents passed away this year and I'm inheriting their home. We're turning it into a rental and have spent money to make repairs and have been paying the utilities. This is for an investment. Are the costs we have incurred this year tax deductible? Okay, so this really is about a rental property. And I do actually work with several people, quite a few people that have rental properties. I actually even personally own a rental property. So I'm pretty familiar with how to take these expenses. So if you made repairs, so repairs, depending on what you're defining by a repair. So repairs like replacing an HVAC or replacing carpeting, those are actually upgrades and would be depreciated of the life of that asset. If you're making a repair, like someone put a hole in the wall and you're just painting it, patching it and painting it, that's a repair, and that would be fully deductible. So there's different definitions here of repairs versus upgrades. And as far as utilities, absolutely. If you do not have a renter in and you are paying the utilities to keep the heat on, electricity to the home, absolutely that is an expense. So number 4, we're contemplating starting a business by purchasing a motorhome and renting it out through an online website. There will be minimal personal use. We are both presently W-2 workers. We're trying to estimate if embarking on such an endeavor will provide favorable tax deductions. So before I even go, because there's a whole slew of questions here, before I go for any further, never do something like that. I guess to me, it's don't do a business unless you want to run the business. Don't do it just for the tax benefit. Like that's not, to me, a good enough reason. If you wanted the extra cash, if you wanted the motorhome and to rent it out to help pay, the loan that you took out on it, fine, that's legitimate reason, but don't do it just to be like, hey, I want the tax benefits. That's not to me a real reason to buy a motorhome or an RV. They're expensive. They're expensive to maintain, to buy, and yeah. So let's jump into all the questions. What tax deductions are available to claim? So tax deductions related to a rental can be insurance, registration, any repairs after a renter maybe damages something, if you have to pay for propane, if you pay someone to help clean it, or any cleaning supplies, if you buy towels and sheets and things, provisions to put in the RV that the renter is going to be using, all of those are legitimate expenses. And the RV itself or a trailer, if you're buying a trailer, would also be an expense. So you would depreciate that over the life of that asset. So those are really the general expenses. It can, and I think, it can also include advertising, if you're paying for a website, or even if you're just listing it on some of the sites that rent RVs, there is a fee there, so that counts as an expense. So what income do we need to make in order to claim the tax deductions? There's no limit on income as far as like tax deductions. There's a follow-up on this. Would we have to pay back the deductions if the business isn't profitable? So no, you don't have to pay back deductions, but yeah, renting can be great. It can be very lucrative. The renting, it's going for $200-300 a night for a nice motorhome, maybe more if it's a larger motorhome. So yeah, it definitely can be profitable, but once you take all of those expenses, including depreciation on a tax return, it might not show as profitable. And the reason I bring this up is the IRS says, it's not a legitimate business. So 3 out of 5 years, you better be making, you can show a loss. After that, you better show a profit. Okay, so it's not really a business, right? It's not profitable, then it's not a business. And that's where we kind of get into the sticky situation. So I do have clients and taxpayers that have rental RVs. And, maybe it comes down to they're making very little income on the tax return because of that depreciation. But it's still necessary. It does still brings them cash, and it's still paying for that RV. And even if they're maybe using it part-time, taking it a few weeks or a few months out of the year themselves to use it, so it's still paying for that. So that's a definite benefit. And then you ask more questions. I'm going to just keep going through them. So I hope that explained. There isn't like an income level where you need to hit in order to take deductions. If you make $500 or $1,000 and you have $4,000 of expenses, so be it. That's the way that business runs. But just be aware of that, like year after year, that would definitely start to be a sticky situation. Is the depreciation of the motorhome tax deductible? Absolutely. So that is part of the expenses, which I talked about. Similar to claiming a house that we bought for rental purpose. So yeah, motorhomes are 5 years assets, so they're depreciated over 5 years. And that's why sometimes you can actually show a huge loss on a tax return because of that depreciation. And then any advice on setting up a business? There's no one right answer here. It really depends on your situation. Usually I see it just as a sole proprietor. You don't you don't necessarily need to register an actual, business with a state, but feel free to do that. I mean, that many choose to do an LLC. That's more of a legal aspect of asking a lawyer if you have assets to protect, to separate you out. Just also be careful. Make sure the RV is registered in your name. And this is where it gets really sticky. It's really hard to register a motorhome or trailer in the name of a business or an LLC. Because now you're looking at like commercial insurance. And that's really the biggest holdup I see with renting RVs. And that if you're going to rent your RV, you have to tell your insurance company, and they're going to possibly raise your rates because now you're renting it, someone else is using it or driving it. So that's really a word of caution. I know that sites like Outdoorsy and RV Share provide insurance. So you may be able to argue with your own insurance company, but just be aware, make sure that you are telling your insurance agent that it is rented so that they're aware of it. Because if there is a claim, they might deny it. So if they find out. Again, I know that a lot of those come with their own insurance, so it may be a moot point. I don't rent out an RV, so I haven't had to deal with that. But yeah, just be cautious of that. Let's see, last question related to renting the RV. Does business need to start first in order to deduct mileage? It seems of researching a motorhome. Again, you can just run that business under your legal name. That's fine. You're sole proprietor. So if you're doing a little bit of mileage to go and find a motorhome and find the right one, yeah, that's fine. I don't see a problem with taking mileage, but you're talking about your own vehicle. So you're taking your car to go to these dealers and look at RVs. I don't see an issue with that at all. And then our scenario doesn't fit exactly your program since we do not plan to be digital nomads. What service do you recommend? So I don't just work with digital nomads. I can work with people that are stationary, that live in a sticks and bricks home in one place, and that is not a problem. I work with plenty of people that do rent out RVs that are not RVers or digital nomads. That's fine. That's just the niche who I'm targeting. And since that's my own lifestyle, that's why I advertise that. But I can work with anybody. It doesn't matter if you're in one place. If you rent out the RV, happy to help. So that would just be tax return preparation. I can work with you on some tax planning, especially as the business gets off the ground, and just answering some of those basic questions for you as you get started. And as you go along, a lot of small business owners are new to being business owners, and they have a lot of questions of what is allowed and what is not allowed, and how that works. And I happily work with them and answer all of their questions. All right. So the next question is also related to renting an RV. This is popular this time around. So I deliver and set up my camper. I write down my mileage for all trips pertaining to the RV. I keep fuel receipts also. Is the mileage and fuel both deductions or even my time? So question number one there, you can only take mileage or actual expenses. So you can take one or the other. And that means that the standard deduction, so mileage is taking the standard deduction. So what the IRS sets that year does change annually. And that means that includes fuel, registration, depreciation, that includes all of those things. So they're lumping it all into one number. So it's, 60 cents per mile or whatever that you get to take. Again, that changes every year. So just research whatever year you're in. And so you can't take both. And so if you take actual expenses, okay, actual expenses is everything. So fuel, registration, maintenance, all of those things, right? Everything to do, insurance, everything to do with that car or that vehicle. In which case, if you do that, you have to do that every year that the vehicle is in service. You cannot flip and flop back from the standard mileage deduction to actual expenses. So yeah, hope that answers that question. So standard mileage deduction or actual expenses is taking one or the other. If you use the standard mileage, you can actually change to actual expenses the next year and subsequent years. I almost always see the standard mileage deduction as higher than actual expenses, but there is exceptions. There are exceptions to everything that I see. So some people do benefit from doing actual expenses. It just is a little more paperwork on having to track all of that. So standard mileage is usually the easier method. Let's see, other question related to that. What about cleaning and cleaning supplies? Absolutely, those are expenses to that business. If you have to clean that RV after each user, definitely that counts. I do not have a business name. It is under my personal name. That is absolutely fine. So again, you're just treating it as a sole proprietor business. You do not have to have a registered business. You can just operate under your legal name. That is not a problem. Especially if you're using some of the outdoor sites like RV Share, Outdoorsy, RVRentals.com, whatever, however you're listing that RV, that is absolutely fine. So I hope that answers those questions. I had 2 questions there, right, piggybacked on top of each other about renting a camper or trailer, and yeah. The only thing I'll also point out, as you say, camper, so I'm not sure if that's a trailer. If that's a trailer and you're hauling it with a truck, since you're delivering and setting it up, and that truck is also used for personal expenses, make sure you're recording your entire mileage for the year. So we're at the beginning of the year. I say take a picture of the odometer right now, or record it somewhere, or use an app to record your mileage, but the mileage would be split. So you'd only get to count the business mileage for delivering and setting up, and then also taking back your camper. And I'm assuming, again, this is a trailer. So if you're doing that, the mileage to the campground where you're delivering it and then going back to pick it up, that all counts as business mileage. But if you're taking that truck and going to the supermarket or running other errands or something, that would be personal. So you'd have a split use vehicle there. If you keep the truck solely to deliver the trailer, then fine, that's fine. But again, just record those expenses. So again, we're at January 3rd. Go ahead and take a picture of that odometer, and the beginning of your mileage, and then December 31st or January 1st of next year, you would take a picture again, and your entire year's mileage. So if you have to split that, some business and some personal, that's the best way to do that. That's what I recommend. And especially since we're at the beginning of January, that's a great time to do that. It's a great question. Let's see, next question. I'm looking to start a new business and I need to choose the correct business entity in order to maximize my tax benefits. If I start the business as an LLC, what would be the best option? Okay, so there is no one right way to start a business, to form a business, to legally register a business. It is such an individual and unique situation. So if it's just you're operating as a sole proprietor, whether you're registered in LLC or not, you're still a sole proprietor, you still have the self-employment taxes. Usually I think that that's the best way to go. Being a sole proprietor, starting off with an LLC is a great option. Single member LLC, registered with your state, you're still a sole proprietor for tax purposes, and I don't see anything wrong with starting off that way. I would not elect anything more than that. So a lot of people think that they should be an S Corp right out of the gate, and I discourage that. S Corp has a lot more bookkeeping, it has a separate tax return. There's just a lot more going on with it, and I don't think it's worth it. You don't see the tax savings until you start to hit that like $75,000 or $100,000 of net profit. So I don't think that that's a good option. So just being a sole proprietor right out of the gate as a brand new business is usually, to me, the best option. You can also choose to not even register a business and just operate as your legal name. That is fine as well. So yeah, definitely reach out to a tax professional that you trust and tell them about your unique situation, and maybe they'd give you a little more guidance of what would work best for you as far as starting that business. So that's a hard question to answer. There's not really a blanket answer there. Let's see, this is the last question that I have received in advance. So again, anyone in here live, feel free to drop a question in a comment and I can hopefully answer some of those live. I'm not seeing any comments. I don't know if I'm just having some tech issues today or what, but please do drop it in the comment. So Last question is, previously as a 1099 employee for a university, I used to be able to claim my mileage to the university to teach. Now I teach 100% online. And in my new contract, it says that I am a remote worker, but the university has the right to require me to be present on campus if needed. If they make that requirement and I need to go to campus for something, can I still claim the travel? Absolutely. Even though it is no longer mileage, but now a plane ticket. Absolutely. That's travel for business, for work. You're leaving your home behind, whether that's an RV or not. So yeah, definitely counts as mileage. So any business travel, which that to me, that would count as business, would count for, yeah, especially if it's a flight and you have to rent a car or any of those. Yeah. So hopefully that answers that question. And I do get questions about that for people who are digital nomads. Unless you actually leave your RV behind, yeah, so you have to basically duplicate your living expenses. That's what I'm trying to get at here. Sorry, lost my train of thought for a second. So travel expenses is duplicating living expenses. So if you leave your RV or an Airbnb or your home behind, then you can definitely take, you fly, right? You fly, even if you took your own car and you had to drive 500 miles or 100 miles away and you had to stay in a hotel, those are all travel expenses. So that to me counts as a legitimate travel expenses. And here I pulled up on, I'm trying to see comments here. Someone asked a question about what about court cases and being reimbursed? I am not sure what that is related to. You said take a picture at the beginning of at the first of the year. I did not since I started my rental. How does that work? So if you recorded your mileage, did you use an app? I definitely would. Can you take a guess? I guess though, as far as mileage, yeah, mileage is definitely a red flag. So that's why and when you fill out on the tax return, you have to show that you have a mileage log. Like there's literally a question that says, I have a written mileage log, which can be electronic. That's fine if you use an app. But as far as that, like if you've recorded all your mileage for the business, then you should be able to take that mileage as a standard mileage rate. I don't see an issue with that, but definitely going for 2023, I would start from the beginning, which is now. Well, we're a couple days in, but I would definitely take a picture or write that mileage down so you have the full year, and so you know exactly, because you're splitting it business and personal, which is why I say that. I'm trying to piece together some of this things from, I think it's Melanie. What about court cases being reimbursed? You say I'm using a mileage tracker and you're renting. So you're renting an RV or you're renting real estate. I put everything in my phone. So if you're using a mileage tracker, MileIQ is so far to date the only one that has proven in court as allowable. That doesn't mean you can't have, and written logs have been in the past, that's fine. But you really need to know, the business purpose, like what were you going to do? And as far as if you're delivering, I'm going to go in because we're talking about delivering trailers and campers. So if you're delivering an RV, you can literally write, delivered RV to X place for this client, and the dates and the mileage that you drove to do that. So yeah. Let's see. What else? I'm not exactly sure. As far as a rental property, if you are doing real estate, is that what Melanie, is that what you're getting at? I'm trying to think through, because it's piecemealing these things together. That's all. So I wanted to get you the best answer possible. But someone else was asking what was the mileage tracker that I recommend, and I will give you, it's Mile IQ. And one second, I'm going to share if I actually have a code so that you can, let me just type it in here. Mile IQ is the mileage tracker. And I have a code that you get 20% off, because if you are driving, I think it's free up to so many miles or trips in a year or month, but after that you have to pay. So it's not very expensive, but you do have to pay. So here you go. There is a 20% discount if you use my code. So Melanie says it is for rental, real estate renting. So as far as the questions you're asking like, are you like a full-time real estate investor? Is that the idea? Is that what you're getting at? I'm still missing part of the question, because you do have to spend so many hours in order to be considered a real estate professional. Otherwise, I'm not, I'm just trying to piece together all of these comments. So, and then was there any, can I deduct expenses for work, clothes, or uniform? So clothes that can be worn outside of a job, okay, are not an expense to a business. A uniform needs to be literally a shirt or pants or something with the logo on it for the company. It needs to be maybe nurses' scrubs or like a doctor's coat, steel-toe boots if you're in construction or any of those trades. Those would all count. Otherwise, if you just buy, a nice shirt and a pair of pants to wear to work, those are just clothing. So they don't count as a business expense. But if you have a shirt that has a logo, like such and such cleaners or such and such electrician, or if I buy a shirt that says tax queen on it, that becomes a business deduction, because it's, But, and as far as uniforms, I'm not sure what else, if you're just required to wear a black shirt and khaki pants, that doesn't count, because those items can be worn outside of work. And this has definitely been tested. People have tried to buy suits and things they claim that they need for work, and that is not allowed, because you can wear those suits outside of work. So yes. So I'm still not understanding what the questions are for you, Melanie. If you're a real estate pro, you can take deductions, using a mileage tracker. It sounds like you're doing all of the things right. So I'm missing a question in here, and maybe it's just lost here in the comments. So I'm gonna, if you wanted to just, court costs. Are the court directly related, like someone sued you for your real estate? Gosh, I've never run into that. I guess that's a good thing. I don't see why those would just be like legal expenses. That would be tied into legal expenses, I'm guessing. And I know, again, I've not run into that. Thankfully, my clients have not had this issue. And I do know that fines are not. So parking fines and things like that, if you're driving and receive a speeding ticket, it is not a tax deduction for the business, even if you're in a business vehicle. So I would also probably even say judgments against you would also not be deductible, but that would be something I would have to honestly look up. But yeah, court cases, stuff like that, legal fees, that all sounds like it would be deduction. I'm just not sure about the judgments. That is something I have not dealt with before, and I am honest. So if I haven't seen it and come across it and it's not common, let's say, then I don't know the answer. So I'd have to look that one up. If there's no other questions, let's see, anyone else have any last thing? Joe asked, can I do my tax return on TurboTax, or do I need to hire someone? That's just a personal preference. So if you feel comfortable, by all means, do your own tax return. And If you don't feel comfortable and that you're gonna, miss an expense or, mess it up, then hire someone. So that's really up to you. I don't think there's one right way. I definitely have plenty of people that do their own tax return, and they're comfortable with it. Then by all means, go for it. If you're not and you want a little guidance from a tax professional just to answer questions, what's deductible, what's not, then I say hire somebody and work with someone. So that's kind of how I answered. So you're asking, you're taking someone to court because they defaulted, the tenants defaulted and damaged your property. Absolutely. I don't see why those wouldn't count as expenses to the rental. Again, those court fees, legal fees, those should all count. So can I write off time spent working for another business without pay? Absolutely not. Time is never deductible. There's no monetary way to claim time. So yeah, time is never deductible. Services provided, if you bill them, for sure. A lot of times if you're working for a company without pay, they may give you like a percent of the company. Hey, you get 1% or 10% or 5% of the company, things like that. Those are usually ways that that's handled. But yeah, working without pay, that's just volunteering your time and being a good friend or colleague, whoever you're working for. So yeah, unfortunately, no, you cannot write off time. There's no deduction for time. So hopefully I answered all questions. I don't see anything else. Let me scroll back through all the comments. Hopefully I got everything. Yeah, I think I got all the questions. And I thank you. I'm sorry for the technical issues today. That was the first one time for me for Zoom literally just quitting on me. But I thank you for sticking it out and for joining me on Tax Tuesday. And hopefully I will see you next month. So the next one is on February 7th, I believe. So same time, 10 a.m. Mountain Time. Thank you for joining me, and I'll see you then.